Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this channel, we break down trading strategies and insights to help you make better and smarter moves in the Forex market. If you are ready to take your trading to the next level, then hit that like button and subscribe to the channel for daily tips and strategies. In this video, we are going to be diving into a powerful tool in your trading arsenal, and that is reversal chart patterns. All right. Now, these patterns help traders identify when a trend is about to change direction, giving you the edge to anticipate market movements before they even happen. Okay, so let us start with the basics. What are reversal chart patterns? All right, simply put, reversal chart patterns are formations that occur on the price charts, signaling a potential change in the current trend. All right, so we want to look at the best reversal. We want to look at the best reversal chart patterns. Okay, so whether the market is trending up or down, reversal chart patterns give us clues about when momentum might shift. Okay, so for example, if the market is bullish, as in this case, you can see that we had a bullish trend here. If the market is bullish, a reversal pattern might indicate that buyers, right, might indicate that buyers are losing steam as sellers are stepping in. Okay, for example, we can see the double top formation. This is a reversal candlestick, is a reversal chart pattern. The double top formation, right? The M formation is a bearish reversal pattern, right? And one thing to know is that reversal pattern occurs at the end of a trend, right? At the end of a trend. So we had a bullish trend here, and we had this M pattern formation, the double top formation, and we can see that the price began to reverse afterward. And then conversely, in a bearish market, reversal patterns suggest that sellers are running out of power, right? And buyers are taking control. Okay. So as we can see now, this was a bearish trend, right? This was a bearish trend, right? And then we can see the formation of a double bottom as well. Can we see that? And we can see that we had a W formation, right? You can see this. This was a W formation, right? And a W formation is a chart pattern that indicates a bullish reversal. So can we see that right after this chart pattern formed, we actually had a bullish reversal. All right. Now, let us talk about the best reversal chart patterns that you need to know. Okay. We're going to start with one of the most popular ones, and that is the head and shoulder pattern. Okay, the head and shoulder pattern. This is one of the most popular reversal patterns. All right, now the pattern has 3 peaks. All right, the head and shoulder pattern has 3 peaks. Okay, as we can see here, for example, all right, the middle one is always the highest. Okay, let me bring this down. The middle pattern is the middle peak is always the highest, all right, which we call the head. Okay, and 2 smaller peaks on either side. You can see there's a peak here, there is a peak here, but the one in the middle is always the highest. The ones on the left and right may not necessarily be equal in length or in height, right? But the one in the middle must be the highest. Okay, when you see this pattern forming, it's often a strong signal that an uptrend is about to reverse. All right, now you have to pay attention to the neckline. Yeah, the neckline is the key confirmation point. All right, pay attention to the neckline. Now, one thing to know is that in as much as this is a reversal chart pattern, it's not always it does not always precede a reversal. All right, yeah, because you might eventually have a breakout. Like in this scenario now, we had a breakout, right? But ideally, if the pattern was to play out according to its reversal duties, if I'm to use that terminology, then we were supposed to have a breakout in the downward direction, right? Because this pattern signals a reversal, right? And we can see that we had a bearish trend right before the pattern formed. Okay, so ideally, if the pattern was to play out as expected, then we ought to have seen a breakout in the downward direction. But eventually, price broke out upwards and the bullish move continued after some consolidation. Okay, but this is a chart pattern, one of the most common chart patterns, the head and shoulder patterns. All right, once the price breaks below the neckline, it usually signals. So that is the reason why you have to watch out for the neckline. Okay, this is the neckline, the point where the shoulders and the head, the shoulders actually are resting on. All right, the point where the shoulders are resting on, right? So if you have price break below it, then the reversal is likely to be confirmed. Okay, so let us talk about double tops and double bottoms. That is the next chart pattern we're going to be talking about. I already gave two examples each. All right, so double tops and double bottoms are also among the most common patterns, chart patterns, right? Now, double top forms when the price, double top, as we can see here, it forms when the price reaches a high level twice, but fails to break higher. This is exactly a perfect example of a double top formation. All right, it's a bearish reversal signal that often occurs and precedes a downtrend. All right, it leads to a downtrend, as we can see here. Now, on the flip side, the double bottom, as we can see here, this is a double bottom pattern formation. The double bottom is the exact opposite. The price hits a low level twice, but doesn't break lower, signaling a bullish reversal. Okay, so these are simple yet highly effective patterns that occur often in the forex markets, and the beauty of them, they are relatively easy to spot. All right, so now you know what these patterns are, but how do you use them? The key is confirmation, right? Never trade based on a pattern alone. Always wait for additional signals like a breakout above or below key levels, or confirmation from indicators like RSI or MACD. All right. For instance, if you spot a double bottom, right? If you spot a double bottom, wait for the price to break above the resistance level, right? For example, this is a trend line, all right? It's a trend line, it's a bearish trend line, right? And then we had a formation of a double bottom, right? And then we can see that this has become a resistance, all right? You can see that this was a support before it turned into a resistance. So before you go ahead to enter this trade, wait for price to break above this resistance, all right? And after waiting for price to break above this resistance, it's important to also have confirmation. So we're just going to use the RSI for a confirmation, all right? So we can see that right after the breakout happened, we had the RSI pointing upward. You can see after a little bit of a retracement, we can see that the RSI was pointing upward. The bullish move of the RSI was still prevailing. Can we see that? So this is an evidence that there is bullish momentum. So this would have been a great point to enter a buy, and we could have considered setting our stop loss below this swing low, and then we can target a significant resistance with a good risk to reward ratio. Okay, since this is a reversal pattern, it means that a bullish trend is actually starting. So we can set our take profit at this resistance zone, and we can use below this double bottom formation for our stop loss. All right, now in as much as reversal patterns are essential, right? They help you to stay ahead of the markets and all. It's important to know that they are not 100% foolproof. All right, they are not 100% foolproof. Okay, instead of reacting to trends after they've already changed, these patterns allow you to anticipate moves and position yourself accordingly. It's all about being proactive, not reactive. All right, always practice good risk management and never over leverage your trades, no matter how strong a pattern looks. Okay, so I hope this breakdown of the best reversal chart patterns has been helpful. Whether you are a beginner or a seasoned trader, mastering these patterns can make a huge difference in your trading game. If you found this video helpful, smash that like button and subscribe for more content like this. Don't forget to hit the notification bell so you are always updated when we post new strategies and insights. And as always, drop a comment below. What is your favorite chart pattern? I would love to hear from you. Until next time, happy trading and stay sharp in those markets.